All right. I'm sorry.
So
I had to have my mute mic. I was I was laughing the whole time. Um, anyway, welcome everybody. Welcome to Slow Markets. We have with us the one and only Coach Jay. As you can see above me, how's everybody doing? You guys like that picture? What's your thoughts on that picture, Coach Jay? Let's make sure the audio sounds good.
check, check. Hopefully everybody can hear me pretty well. That picture is one of the best I think you've had for slow markets. And I think that's why some of our viewers are here. So welcome. Hopefully the turtle can put out some fires.
Through the turtle. Yeah. So that being said, guess what, guys? Everybody knows what's going on. They got it. They got the hint. They got the wink. Starting probably I'll make that announcement soon. So stay tuned. Stay everybody. Let's go ahead and do the intros and we'll get started. So everyone like that image. It's AI generated. It took me a while to get that set up. It AI is addictive. It really is, Coach Jay.
Yeah.
Playing around with the pictures and getting me a nice little folder worth of good images that I could be using for slow markets. So anyway, that being said, let's go ahead and get into it. I'm going to do the intro and then we'll get started. So welcome to Slow Markets, everybody. As you guys seen, I'm here with our one and only Coach Jay. As always, we're going to be talking about the live markets. Our risk disclosure is in the YouTube chat. Everything we say and talking about is for Coach, for educational purposes only. It's not as signals. Isn't that right, Coach Jay? Do you follow any of my trades? Do you just like, hey, Coach, this is a good trade? Follow it exactly.
Not at all. I think what I do, you're a really good trader, right? So I can understand why a trader would want to follow your trades. But if you find yourself doing that, I would say, find out what Dakota is looking at and see if it aligns with what you're looking at. And that's what I try to do. It's like, oh, yeah, I can see why he took that trade and it fits my strategy as well. Um, that way, whether you win or lose, you can be comfortable with the decision that you made. If you're taking somebody else's trades, you got to take their losses also. So just keep that in mind.
Awesome. And do we have news come out? I seen right, and this happens to me a lot. Is right when I'm getting things set up for slow markets. We have slow markets move. There's some big event. I don't know. Sometimes things happen, and we were just talking about it. And I think we could just, instead of doing a rapid fire right now, let's
Yep.
talk about what we were talking about before we started the stream, and that was the Japanese yen. I just added the USD Japanese yen onto my watch list, for lack of a better word. And right before stream, you're like, we got this nice bounce. We went from 63,600. I don't know how would say that, and we've
It's
bounced all
so
the way
hard to
to
read the prices.
63 like 730, and you're like, this is shortable. So I'm going to switch it to your charts, and let's have
Yep.
you kick it off for, let's say, have some good conversation for 8 minutes, and then maybe in 8 minutes we could bring that AI generated image back up. So if everybody's here,
Let's do it.
people will continue to pile in. We have some laggards that is just like slow markets, slow to the party. So I'm gonna pull up your charts and let's get to it.
All right, sounds good. So before we get to the charts, there was some news out of Japan, foreign investment Japanese stocks. There's a number. What they were, there doesn't really show a forecast, but the previous number was 248 billion. Uh, Today's number was 82 billion. Not really sure what that means. I don't really use news and numbers like that to affect my trading, but it obviously had an effect in the market. We kind of see this spike up. But you talked about this yesterday, Dakota. Coach Paul has talked about this market for the last 8 months with us in at the buzzer. But the Japanese yen has been under very heavy sell pressure for the past 8 months or so. And if we can see this, the white line I have here is the 200 moving average. The purple is the 50. The yellow is the 20. Pretty much anytime we get a spike above that 50, it gets sold off immediately. And if we hit the 200, usually a pretty good spot to take a short. So when we got on the stream doing a sound check, we saw this spike in volume, brought us right back above the 50 moving average. And I'm not doing anything but trading the pattern until the pattern breaks. It traded up to that 50 moving average. It's also some support, which is now acting like resistance. And I took a 2 contract short with my stop above this level of resistance here, which the price is 63.83.5. We'll get
Yeah.
better at calling out those prices in the end because I don't know
I
exactly how to
have a
do
bad
it.
habit too.
Yeah,
While we're here, would you be able to expand the chart? Maybe I don't know if it's easy to
yeah.
minimize the time and sells in the DOM.
Let's do
Just
that.
make it easier because I'm okay.
How's that?
Yeah, that's a lot better. So you're short now,
I'm short.
and you just got short as we were talking
Correct.
about it before we pulled up, and you
Correct.
shorted this because I mean very basic pattern recognition. Every time we've had a nice bounce on the Japanese yen, you've just it seems like shorts the play, right? And so,
Yeah.
how long do you plan to hold this trade? Is it going to be something you plan to hold throughout the evening and maybe even onto tomorrow? And if people didn't catch it, we have some people joining. This is the Japanese yen. I just added it to my watch list, and if you guys remember last night, I was looking for a breakdown below that resistance. We got that, and we just had a nice bounce up right before we started slow markets, and here we are. Coach Jay's the one that pulled the trigger in a short.
So right now, my target is my stop is about 25 ticks. My profit target is 2 to 1, about 50 ticks. I'm looking at this spike over here, and I'll zoom into it. Oh, where did I just lose it? Where did it go? This spike over here, this spike of volume right here. I'm looking to trade back into this area, right
Back
where
on
some of
April
this.
28th, April
Yep, April
27th.
28th.
Okay.
That's correct. That's correct. Not a market that, if we look at some of these moves, right, we get a spike in volume, and then the eventual trade usually plays out sometime in the US session. So I'm just going to leave this one on. I'm okay with the risk. If the market spikes and takes me out, that's all right. If I find another trade opportunity, I'll take it. But this is pretty good. I think 2 to 1 risk reward, and a trade that I'm comfortable going to sleep with.
Man, so you're gonna go to sleep with this on.
I'm gonna leave it. I'm gonna leave it unless I get my profit target. While we're on the call, I may take, if we get close to that profit target while we're on the call, I'll take one off and then leave it running.
Okay, fair enough. Fair enough. I'm well. There we go. That's a way to start slow markets, is with a true slow markets trade where you're placing it, you're
Yeah.
going to be holding over tonight. And that's a great start. I'm just starting to look at the Japanese yen, and that's what we're talking about right now. And I think that's a good intro as we talk back and forth, and everybody's waiting so patiently. In another 3 minutes, it's practice patience. Remember, guys, this is we have what do we call it? An opportunity to practice something that we really struggle with in trading, and that's being patient. Yeah, I see everybody. They're probably at the edge of their seats, ready for something called a fire drill. But yeah, I'm gonna continue to watch it. I probably won't be placing a trade on the Japanese yen for another month or 3 weeks, somewhere around there, until I feel comfortable. And I love to have you on. I love to see you, trading it. I'm gonna be able to do the same thing. And what's the tick value per
So 625,
six
625,
$6.25 per pip? Right?
$6.25.
Is that what they call it? It's a pip, right?
It's a bit, right? Yeah.
Yeah, pip. It's a tick. It's Japanese yen. The ticker symbol, I believe, is 6J, right?
6J. That's correct.
Okay.
We got Coach Paul in the chat saying that he likes this trade idea as well. Shout out to Coach Paul. He's the reason I'm looking at this market to begin with. He's been swing trading this market and kind of calling it out. So when you hear something happen enough times, you're like, hey, why don't I just jump in and see if I can take a trade myself?
Yeah. I don't. I'm not brave enough to jump in yet. Not yet, because when I jump in, I'm probably gonna try and do it through a combine, pass it into an XFA, and then maybe transition it to a live account. I already have a lot of markets that I'm already following, as you can see. After we do this fun little event here in a couple minutes, we'll do a rapid fire where we'll go through the NASDAQ, crude oil, Nikkei, gold, and now ES and the Japanese yen, which is a lot to cover in 1 hour.
It is.
But we found a fun, efficient way to go through it and to be able to talk about them, maybe find some trades. And as you know, I'm a trader first, and we'll see what we can do.
Yep. Dakota, the one thing I want to comment on, you saying you're not comfortable jumping in yet. I think that's a great thing to do. Um, you want to be comfortable when you put real money behind your trades, right? So traders, if you hear someone talking about a market, or someone's just like, hey, orange juice futures are going crazy, everyone rushed to go trade it. If you've never traded before, it's probably not the best time to go put real money behind it. Do what Dakota's doing. Do it in a more risk-free environment, either a combine or a practice account. Get familiar with the markets, what news is going to affect it, and things like that, and then put your real money behind it. There's no rush to try to make money in a very new market to you.
Yeah. Have you ever done that? Have you ever put money rush behind? I heard maybe.
Oh yeah.
Maybe MP did that with GameStop.
He did. And I think it's something that we've probably all done, right? Especially, when you're earlier in your trading career, or just when you hear an opportunity to make money, right? We're traders. We like volatility. So if something's moving, our natural instinct is to kind of jump to it. But you want to be sure you're still following your risk parameters, and all that stuff.
Yeah. That's a fun jab. We always tease with each other, and even behind the scenes, we're always messing around with each other. We always wish each other the best, but yeah, we're always teasing about it and playing around. But yeah, that being said, take a look at this picture. This was a fun one. I just started. But essentially, here's the great thing about coming to slow markets. We get to have our very own start of a fire drill, and there it is in the schedule, in the YouTube chat, our fire drill. So if you want to click on that and sign up, I have the details that I'll pull up now. So fire drill, free. So fire drill tonight. It's for one free reset. This is an early check-in, and also remember, guys, if you missed it and we get to see it tonight first before anybody else, it will be during tomorrow. I don't know exactly what time, but it will be again tomorrow. It looks like maybe during fire markets or power hour, fast markets or power hour tomorrow. But if you can't make it, guess what? You guys are spoiled. You get it here. And also on top of that, Coach Jay, this is something I've been pushing, and and everybody here knows that I've been pushing to give as much as I possibly can to the traders who show up for slow markets. This is part of it, but on top of this, I'm looking at finding something exclusive, right? Exclusive to you guys who come and join me every night for slow markets. So that is in the works. This is a fire drill. This is an early one. You'll have another opportunity tomorrow. So this is kind of like the people who's first in line. You guys get to see it first. But hopefully soon, I will be getting some exclusive stuff for slow markets. And that's when, if you don't show up for slow markets, then it's too bad, right? So if this is an example, say you sign up and you missed it, that's a one shot. So that is an advantage. Even if you are not trading, maybe you don't trade during slow markets, maybe you don't trade during the Asian session or London session, I would always recommend tune in, ask questions, ask me anything, and hopefully you're able to learn something. We have amazing guests like Coach Jay, Rips, Coach Robert. I'm hoping to get more coaches on, more guests on, and I always love to have Coach Jay on. Obviously, you trade the yen, you have a trade going, and I want traders who are able to do such things. And how long is this going to be available? Let me see. I'm horrible at notes. The form will be up for 15 minutes. The form will be up for 15 minutes.
15 minutes. You got 12 minutes to go. 12 minutes to go. Make sure you tell your friends. Make sure you tell them to watch slow markets, by the way, right? Not just come for the free fire drill, but for the education also.
Oh yeah, that's a big one, right? So many people they just show up, and then as soon as they get that fire drill, they leave. So hopefully when I do get it, and when I get everything, that would be it, right? Then guess what? They don't have to show up. And maybe we do one where I don't tell anybody, and we do not tell anybody of when it's going to be, and it would be a surprise. And then they wouldn't be able to just show up and leave. That's what I'm hoping for.
One last thing, and we're going to get the exact count for how many people click that fire drill form. I think we got 19,080. Sorry, not 19,000, 1,980 people watching right now. Let's get those likes up. Everybody hit the thumbs up button. Give a thumbs up for Coach Dakota, #1 trader on the Top Step leaderboard, and still, comes here daily to give out information. And it's really to help traders. So let's hit that like button. Let's get a thumbs up while you're filling out that fire drill form. And then we'll get into the charts.
Yeah. Yep. We still have 10 minutes. We'll get into the charts before that, and I'm sure traders will join and get that. But I have a question. And as we're talking about this fire drill and we're talking about everything, I don't know if you happen to catch some conversation I had with Hoag during Power Hour about doing maybe a charity trading session or something down that lines. What's your thoughts on that? Because I asked Hoag, of course I asked Danielle, she's in the chat, and I'm always curious asking around, like, what's your thoughts, about that coming from a trader's perspective, coming from, like, what's your thoughts on that? Do we just have, like, maybe during a 1 hour slow market session or a 1 hour fast market or power hour session, like whatever profits I make? Do we do like a fun, like, scholarship program for traders who maybe want to trade in a combine, but just don't have the means to do it? Or do we find a charity that gives back to, like, children or people in need? And do we just do that where, say, like today would have been a good example, right? I made about $1,000 during Power Hour. And so after the end of Power Hour, the next day, maybe I come on to TopstepTV and I'm able to do a donation to one of the charities. That's what we're figuring out. So what's your thoughts on that?
I think it's a great idea, right? And we've seen kind of like these marathon, donation streams and things like that, right? If we could do something where, hey, every percentage of $1 that's made on a Top Step stream for the day is donated, and we're kind of figuring this out as we go. I think this is a great idea, right? We're kind of blessed with the opportunity to be able to trade and kind of sit behind a desk or sometimes on our phones on a golf course and make money.
Come on.
So I think it's a great opportunity. Finding out exactly where that goes or what that looks like. That stuff would have to be figured out. But yeah, there's a bunch of trading. I think what was it called? Traders for a Cause. I think Mick was saying he was at a Traders for a Cause event the other day in Chicago, and it's something similar, right? It's, hey, everyone who's joining here, we're blessed with this opportunity to pull money out of the markets. Giving some of it back always feels good.
Yeah, yes, 100%. And like I said, this is just barely me thinking about it, starting the conversation with the Top Step team to see what we could plan out, right? Because everything must start with a conversation, and then we have to iron out the details, like how is it going to be, what is it going to look like, and figure out those details first. But I think it's a good fun thing that we could all talk about. We could all pull our more than one brain is a whole lot better. And I was just curious to see what everybody in the chat.
I think the chat seems like they're loving the idea. And Danielle, of course, Danielle the Great, said already, we are working on ideas like this, and there are more details to come. And I'm not surprised, right? And that's kind of just Top Step continuing to innovate, continuing to push things forward, help out traders, and beyond that. So I think that's awesome.
Yeah, but then if I have another $34,000 day, maybe we'll just make sure there's a cap.
That's why I said a percentage.
No, we'll see. Right. I don't mind if I do have a $34,000 day. I wouldn't mind giving that.
Yeah.
Whatever I can make in an hour. And I mean, that really is a good point, right? Like you made that comment, like I was on a golf course and I made some money. There's a lot of people that's not fortunate enough to go through this, and there's going to be so many different ones. But anyway, let me go ahead and let's get back to the markets. We have you guys have 7 more minutes until that sign up is done. Now remember, like I said, I have the notes here. It will be the fire drill will continue on to tomorrow, so everyone who missed it, they have that chance. But you guys get first, and then I'm also working with the team to see if we could get something exclusive here for slow markets only. I want that to be a surprise. I don't want it to be like a wink type of thing or give any type of details. I want it to be random, and for the people who do show up, get that exclusive giveaway or that exclusive whatever we want to do, rather than just like, hey, guess what, guys? There's this huge giveaway happening in slow markets. Everyone piles in, they get the free reset or free whatever, and then they just leave. So definitely going to be a fun thing. So if you missed it, the link is on the YouTube chat. Other than that, let's go ahead and begin our rapid fire. Let me see if I can get this fireman turtle out of here. There we go. Let's do it. The Nikkei was selling off, but let's start our normal session. And as we go through these, I'm going to be looking for trades. I'm going to do the rapid fire, and then we'll toss it to you, and then we'll go through any markets that you might see as interesting. If I see a trade, I'm going to stop and maybe take the time and talk about it, because I am a trader first. And if I see something setting up, maybe we only get as far as like crude oil, and then the whole session I focus on a crude oil trade. Sometimes that's how it is.
You
But
only need one.
Yeah, exactly. NASDAQ was interesting. I've been in a short mindset. If you haven't known that, Coach Jay, is I've been more short, and I've been taking a lot more shorts than usual. Essentially, we're consolidating. We're in a consolidating market. This is the candlestick that I've been looking for on pretty much the 23rd. What is it? May 23rd. And I'm looking at the high and the low of this, and I'm thinking anything in between the high and low of the daily candle on the 23rd, which is about 617 all the way up to 19,000, we're consolidation. Now, we had a doji candle 2 days ago. Today we finished, this is very bearish. We broke down, and now we're heading back down to the bottom of this range. And the way that I see this is the bottom of this range is about 680s. It's more a zone. So that's the first area that I see this market going. Of course, we had that sell off. We continued to sell off, and that provided a good looking gap here on the NASDAQ. And the next stop I see for the NASDAQ on the short term is at least 680. I zoom down to a 60-minute chart, and sure enough, it's pretty clear and obvious. That's here's that 680, 690. You can see we have a lot of support there. And if we do break down below that, the next area, of course, is going to be the 630s down to 620s. And so that would be the next area that I'd be looking to buy. So just because we're selling off, to me, does not mean the market has changed. I still believe, and you could correct me because we all have different opinions, is I believe the market is still in the buy the dip mentality. If we get down into this, I think these are going to be great opportunities, the way I'm looking for it, to have good risk rewards, start looking for opportunities to be buying this market rather than selling. Now, if we do get down here and we start breaking down, and if there is some type of reason that we are starting to break down, then the question is going to be, is this now a market turning and selling off? And as I was talking, you guys see I just put that trend line. This could be something to consider. We're right down at this trend line. Depending on how we want to draw that. So that could be a factor, maybe. Maybe this is something that could play where we come down to maybe 701. I mean, we're right there right now. 704, and we honor this trend line. What's your thoughts on that? I think I want to talk a little more about this rather than just do that rapid fire. What's your thoughts on the NASDAQ, Coach?
Yeah, it's hard to be a long-term seller in the equities markets. But I agree with you that it looks heavy right now.
This is the hourly.
That's lines up with 18,700. Could be where we bounce. Do I want to take a long here is the question. Because I'm looking at 18,620 also.
I have your charts up, so there we go.
All right, awesome. So what I'm looking at, and I agree with you, like I said, it's been heavy and kind of leaning towards the sell side. This green line here has been acting like a support. What that is an anchored VWAP from CPI. You can see every time we've hit that line, we've bounced. And, quick trip below it, market bought it right back up. Now I'm thinking, is this the same opportunity here, right? Do we come back down and test these prices down to 620? Or is this just one of those, we looked below and then the market, buyers find an opportunity to buy it right back up. Today was the first day we closed under it. in 5 trading days. So
Hey, I learned my lesson on Friday, Coach Jay. I was trying to short, thinking we could continue off. And
yep.
you know how that ended for us and the house account.
Yeah, it did not work.
And that's exactly, and that you have it up right there. We sold off, and literally the next day we were right back up.
Right back up.
Right in that 18,900. So if it's not broke, don't fix it. To me, I think this is the same mentality.
Yep.
Why not, right?
Yeah. The one thing I will say is I know we do have jobless claims tomorrow, and that might be the catalyst to change the markets, right? I'm not sure how much I would expect out of a trade in the NASDAQ right now with that big number coming out tomorrow. And trading after the reaction to that number is probably how I would trade the NASDAQ.
Yeah, fair enough. I mean, we get to these key levels and then we either break them or, bounce off of them. And tomorrow could be that catalyst to break or bounce. Right now, I'm obviously going to be biased towards the bounce because this is the level. And I'm sure there's been news events from May 16th all the way to today that have been very critical. And regardless of that news, guess what? It's been bouncing. And regardless of how we feel the market should be acting, price gives us it all. So anyway, that is all I have on crude oil. Let me go ahead and switch back to my chart, not crude oil, NASDAQ. Now we're going to go to crude oil. I am tempted to get in long crude. I really am. If you were watching yesterday, this is a 60-minute crude oil chart. And we've had this huge, very nice rally. I say huge. It's from like 76s all the way up to $80 a barrel. We got that $80 a barrel. Of course, in hindsight, that would have been a great short trade. Coming back up here, that would have been a great short trade. But unfortunately, I didn't take it. I would much rather, I've been waiting for a pullback. This is the pullback I've been waiting for. And I think I'm going to be taking this opportunity on this pullback to look for some long entries. And, a couple ways that I'm looking at entering the market is we know that crude likes to run stops. So maybe there's an opportunity to put some buy limits just below $79 a barrel. See if I get like maybe 78.90, maybe 78.80s, somewhere in that zone that we had consolidation, and then take a nice rally. And of course, I'd probably be having my stop loss at like 46s to 50s. Something like that is what I'm immediately looking at. Another note is maybe we maybe we already had that. Maybe we have something called a reverse head and shoulders. And I think I'm looking for a run back up to a test of 80, and I zoom into a 5-minute chart, we can see that head and shoulders that might be forming right here. So this is a possibility. Maybe instead of buy limits, maybe I do something like a buy stop that will trigger me into a long if we break above the theoretical neckline of this head and shoulders. I'm not sure. Do you trade crude oil, Jay? I should know this.
I do. I was actually in a short crude this morning from right around that 80.50 level. I think my short was like 80.46 or something like that. I did not catch that whole crude oil move. I did not catch that whole move. I think I probably took 10% of what that move was, but it was the right read. It was the right idea. Like you said, that 80 level, 80 is a difficult level in crude oil. Anytime we see it trade around that 80, it's never easy, right? It doesn't just break out and kind of just continue running. We find a lot of consolidation. Coach Paul and I were calling that the level that should not be named, which is $80, because every time we were looking for crude to break 80 for, it felt like a month. And anytime it got up there, it rejected, and it kind of did the same thing.
I mean, that's how it was like for me all January, February, just waiting for it to break out. We broke out and then we held above it for like a month or so. Now we're down, and now we're just, I think it's just like a battle of like what do we call it? Seasonal demand versus every single time they release numbers, it's always off. But we're technical traders, and regardless of like what we think, again, it's a technical pattern, and I'm looking at this as an opportunity to buy a pullback from this very beautiful bullish trend starting May 24th. And yeah, very much am I liking longs here. And it's just, where do we buy it? How do we get into a long? And how do we manage risk? So that's the way I'm looking at it. That's the way I'm going to be looking at it going into tonight and tomorrow. Okay. Anyway, let's go to, people are calling out gold. And I think that's a fair assumption, because I'm going to touch base on gold just like we touch base on crude oil, because I think we might have something similar in terms of like the biased. So here's gold on a 60-minute chart, and we had a nice sell-off, right?
Question for you,
yeah,
real quick question for you, Dakota.
go ahead.
Which gold contract are you looking at? Because gold is in rollover.
Fair enough. I did roll over my gold contract. I am
Gotcha.
looking at the 8th month. So
Nice.
that's August, right?
Yep.
So I'm looking at the August. I rolled it over yesterday. I am now looking at August. And so here is the way I view gold. Originally, we all know I was shorting gold. I made some decent money. Today's already Wednesday. Yeah, I made some decent money. I think was it last week? My days are all screwed up, guys. Anyway, no, it was Tuesday. Yeah, it was wow, it was yesterday. The other day I made some money shorting gold. We had this huge sell-off. We had this pullback, and then we had that continuation, these sell-offs that I was looking for. And so now the question is, are we going to consolidate for a little bit longer? And so the question is, do we just break down, and then do we look for new lows? And maybe we look for 2336, which is, I'm a little bit tempted to take a breakout trade to the downside to see if we can see 2336. But there's also an argument to be made at this level to take a cheap long on gold, to see if we could get a bounce back up to at least maybe 64, maybe 70. I'm not sure. My bias is to the downside, because the more immediate trend right now has been down. And if this was the pullback, then we're going to look for a continuation down to 2335, 23 to 36 zone. Or maybe we see 2316. What's your thoughts on that, Jay? I'll switch to your charts. You're on mute.
I got it. We'll throw it in the I'll start the charity bucket.
I need to get my own. Yeah, we're gonna have a slow markets one.
But I like gold to the short side also. Let's see where we're at on a 30-minute. Here's our open. Yeah, I'm liking this to the short side as well, but right now feels like shorting the whole. Because of excuse me, all of the support that we have here. So maybe a bounce up towards 2365, 2367 area, like you were saying, might give a better opportunity for sure. Right now, you could short it here, but how much room is there left in that trade before the market is going to bounce?
Exactly. I mean, it's almost like, do you want to get long or short? Pick, right? And if you want to get long, that provides like a cheap, good risk reward, which isn't bad. But then if you want to short it, then maybe you just wait for that pullback and get short. Or if you want to take a little bit of like a 1-to-1 or risk to see if we could get a breakout. I mean, I'm very undecisive, and when I do, it's just like let's just wait for a pullback, maybe a short. Oh, unless maybe the market starts to show us that there is going to be a reversal around that level, Coach Jay, and see if there's some like a consolidation. Maybe we get a longer consolidation and we start to break to the upside. Then we take maybe a long up to like those mid 60s, like you said. And that being said, we have a question. Now, as we're going through this, guys, feel free to ask your questions. We have amazing moderators who sends me those questions. Coach Jay, you can see the chat. We're going to try and get to these questions, but now remember, an hour goes by so fast. We can't always get to the questions, but one of them says, are you able to trust the pattern formations on lower time frames? My answer is yes. Markets are fractal, so patterns go on all time frames, right? However, the higher the time frame, typically the more trustworthy it is. That is the way that I view it. I don't know if you've had different experiences with that, Coach Jay?
I would 100% agree with that. A support or demand level or whatever you want to call it, to me,
Mm-hmm.
is going to have a lot more weight on an hourly chart than it does on a minute chart. But that doesn't mean you can't trade them with the same technical patterns. Uh,
Yeah.
if you're looking for breakouts out of ranges, they happen on multiple time frames. Um, so much so that sometimes what I'm seeing on a 3 minute chart for a swing trade, I'll zoom out and look at it on a daily, and it's the same exact pattern, and I'll trade it that way.
Yeah, and that's why I always recommend traders to use multiple time frames, and looking for different things like that. So that way we have to have like, hey, 5 minute, use a different time frame. 1 minute, use a different time frame as well. Like you don't maybe I mean do there's no right way of trading, but I'm always going to recommend traders use multiple time frames. I mean at minimum two. Like maybe look at the 5 minute, an hour, maybe 15 minute, 30 minute. I don't know. It's up to you guys. I will always recommend that. Um, yeah. So
I'll say
anyway,
one thing. This is
go
not
ahead.
really a slow market. We got a lot of markets moving right now. I'm seeing in the chat, hey, silver's dropping, crude's doing this. Ton of opportunity out there. I'm still sitting in my slow Japanese yen trade, um, but uh, there seems like some things going on out there.
Yeah. That being said, let's talk about Nikkei. That right before we came on screen, we're like, was there news that we missed? Did we miss anything here on Nikkei? We seen that the Japanese yen, which we just pushed. It had that nice bounce, but let's think about Nikkei for a minute. That is quite the sell-off, right? We went from basically 39,170 all the way down to 37,600, and now we're getting a nice little just bounce. And could I have caught this bounce? No, no. I'm looking at this chart now, thinking like, would there have been any reason for me to get in? Unless I was very aggressive, I'm like, okay, this is where we bounce based off of this little bit of support that I see here, maybe. But this was a little bit stronger support on May 1st, May 2nd, and I would have rather seen the bounce there rather than down here. It's just hard to catch a bounce. Trust me, Jay. I tried to catch and
Oh
do
yeah,
reversal trades on the Nikkei. Man, they kill me because the Nikkei could just
just keep
run
going.
and
Yeah.
run. Um, so that being said, since we've sold off so far so fast here on the Nikkei, and could there be a possibility to take a continuation trade? And the way that I'm looking at this is, do we look, and maybe this is something I'm looking for, is if we get to 37,000 or 38,000 evens, as this was support, maybe this support can become resistance, and this could be an opportunity to short it. That's what I'm looking at. That's what I'm thinking through. And it's a key psychological 38,000. And I'm seeing it here again during that sell off since the open at 5 p.m. Central Standard Time. And that might be right here, right now. Here in a moment. Let's see. I've seen you play. I've seen you watching the Nikkei.
Oh
Have
yeah,
you?
I'm looking at it now.
Okay, okay. Yeah, I know you were doing that. Have you placed many trades on the Nikkei?
Not many. I would say probably 20 total.
Okay, well that's still quite a bit.
Yeah.
What's your thoughts on a trade like this?
So I'm looking at the same thing on a 30-minute chart. Those same moving averages I talked about with the
Yeah, your screen's
Japanese
showing
yen.
now. Yeah.
The gold is the 20, the purple is the 50, the white one is the 200. There's a clear
Okay.
distinction between these lines, and you can see this downtrend.
Mhm.
There was this pretty strong candle, and we're pretty sure that that was the reaction to the news in Japan, whatever number came out there. But that 38,000 even number gives you that pull up towards that 20 moving average. And markets, when they trend, tend to hold that 20 moving average. So maybe you have a little bit more room up by the time. So this is what I'm thinking, right? By the time the market gets to 38,000, this moving average will move down as well and probably be right there, right? Markets tend to hold that trend, hold the 20 moving average in a trend. So that would be a nice spot to kind of limit your risk. Um, just looking
Yeah.
at the volume, What's interesting about this negative candle right here, right? This candle closed lower than it opened, but if just looking at delta, and full disclosure, I read volume in any market that I trade. I haven't done it so much in the Nikkei, but this candle had positive 13 delta, although it was a candle that ended closed lower than it opened. Um, so that's interesting, right? There were
Actually,
stronger buyers technically in this candle, but price kept going lower.
yeah,
So
that
just
I like that. And I was actually even thinking like, we might not even get up to 38,000
right.
because I mean essentially the low I'm going to switch to my charts. The low was 37,600 and we've bounced, you know,
Yeah.
pretty dang far from that. And so there might be a possibility to shorten this zone, but I want to make sure it's within a reason. This is just a 1 minute chart. Let me see if I could go back to that 100 and see like, is there something that would indicate shorting here? And I'm not completely convinced. I know we had some support around the 37,800. It doesn't mean it won't work. And as we've been talking this through, we have been selling off a little bit. And there was a couple questions in the chat. Do we trade it this time? Yes, we do. That's exactly what we're doing right now. Coach Jay, you have a nice short Japanese yen that we'll get to. And we just got finished talking with the Nikkei. I'm going to keep an eye on the Nikkei. I'm keeping an eye on all these markets, essentially, seeing if there's going to be any opportunities. But we're at a really interesting point of conflict. And it seems like when one market lines up, a few of them tend to line up together. Because the way I'm looking, I'm like, NASDAQ's getting at an interesting level to buy it. Nikkei's getting at an interesting level to short it. Gold's getting at that pullback. Not gold. Crude oil's getting at that interesting level to buy the pullback. And tonight just seems like there's a lot going on. There's a lot to talk about and a lot of opportunities that might be presenting themselves. And of course, I'm not going to be like, okay, trade there, trade here, trade there. And by the end of slow markets, I have like a trade on every market. Who knows though? So we are getting this bounce now on Nikkei. While we watch this, I'm going to keep this chart up, and I'm going to be I'm going to keep watching Nikkei. And if this does present itself, I will jump to it. And I might cut you off, Coach Jay, and see if we could get in. I might be getting into a short on the Nikkei. But other than that, everyone, we did talk about gold. ES. What's your thoughts on ES? This is a new one that I was talking about. I mean, essentially, I view it very similar to the way I view the NASDAQ. However, it has its own characteristics, of course. Last night, I was looking at like, hey, ES looks a lot heavier than the NASDAQ, and sure enough,
A lot heavier.
We are selling. We're below, and even if we look at a daily chart, we are below that key candlestick that I was looking at on the NASDAQ, right? This was the point of reference of the 23rd. We just broke below that on the ES. So do you find any significance in that? Because this is what I'm thinking about in my head. I'm thinking like, okay, well, you know what? ES just broke down below that candlestick on the daily on, what was it, May 23rd? Does that mean the NASDAQ has an opportunity to break down May 23rd's low? What's your thoughts? Because I don't look at the ES a lot, but that is something that I'm just immediately thinking about right now.
Yeah, I agree with you. The ES does look heavier. We are trading below that psych level 5,300. And if you can bring up my screens just real quick,
Yeah.
we talked about this at the buzzer as well. I had pointed out the anchored VWAP to CPI for the NASDAQ being supportive. It's been the exact opposite in the ES. Sellers have been pretty much in control or the market imbalance since that CPI number. And then it's starting to look like the NASDAQ might follow that. We actually just retraced that entire move from the CPI. We're kind of trading at the low of it right now, which is 52.65-ish. So seeing if there's any support there, right? Because we know buyers stepped up at this point. Are they still in the market here defending these prices, or are we going to continue selling lower? And again, I think the jobless claims GDP number tomorrow is going to kind of show us and give us a new reference point. Um, and someone's asking, Scott, bro, can you explain why you chose CPI to anchor VWAP? It's a major event, right? We know that the market was waiting for that number to come out. We saw some pretty choppy days prior to it. So anchoring it there gives you a frame of reference like, hey, since this point, since that data has come out, what has the market thought about, price, right? Is it fair price, or are we buying? Are we selling? That's why you anchor to that. And then if we get another reference point, then it just moved the anchor.
Yeah. Another thing I just noticed on ES, take a look at my charts. We are at a interesting area where back in like May 10th through May 14th, this was acting as a key resistance area, resistance support zone. Could this signal maybe this would act as support? I don't know. I don't trade the ES. I don't know how it reacts, but I mean, basic technical
You trade
analysis.
charts?
Maybe this. I mean, that would make sense to me. Look at this nice support resistance zone here on the ES around 52.60 to basically 65, 52.60 to 52.65. That's kind of where we're at now.
Yeah, I definitely agree with you. Pretty much we retraced that entire move, and the market took off from here the last time. So if buyers see a good reason and they like these prices, we can go right back up.
I agree. Oh man, whatever you say on the internet just does not get deleted. I made a comment during Power Hour as a joke about the VWAP, and the chat just does not let that go.
If Carl Hungus is here,
No.
there might be a meme coming soon.
Yeah. Okay. Let's cut that one short. Let's. Oh, that reminds me of, I don't know if I watch bowling. I used to, like, who's that professional bowler where he's like, yeah, who do you think you are? I am.
Yeah,
Have you
yeah,
ever
yeah.
heard that? Yeah, yeah, he
Yep.
was interesting. Anyway, a couple more questions I have. I used to use these. I don't use these anymore. I kind of just eyeball it, a Fibonacci level. Pete Weber, that's the bowler. Yep, love him. He's an old man. He's an amazing bowler. But VWAP, or not VWAP, Fibonacci. I don't use Fibonacci's, but I kind of eyeball it, and things tend to align from the technical aspect. I think you use what, the 50 moving retracement, or
Yeah, I don't even use the real fib numbers. I'm just looking
okay.
at 50% retracements of candles.
Okay. So pretty simple. I mean, it's something to keep in mind, right? Does it work? Yeah. Does it work all the time? No. It can help give you a good perspective, though. And I would say that it's a decent tool if you want to use it, but make sure you use it and you have a reason, and it's not there just to clutter it up. Fractals, or markets are fractal. What is your definition of fractal, Coach Jay?
If I had to put it in my own words, it's whatever technical pattern you're looking at can be applied on any time frame.
That's good enough for me.
That's it.
Yeah, I'm sure you could Google it. There's so much information out there. But yeah, that's the basics, right? If it happens on a 1 second chart, those same technical patterns happen on a daily, right? Consolidation, breakout, bullish flag, and so forth. Anyway, let's move on to the last one. Your yen. We already talked about that. So we covered all the markets. We are pushing up here. I switched over here to the Nikkei. Do I get in this short, guys? This is not a signals class. We made that very, very clear. This is not a signals class. This is for educational purposes only. This is how I trade. I want to show you guys how I trade. And I think it's only fair, right? And part of that is showing by doing. And this is the Nikkei, which is the Japanese market. And I am looking for this key $38,000 level. We've rallied up. This is a 1 minute chart. Let's take a look at a 5 minute chart maybe. And look at this huge sell-off. This has been quite the sell-off. It's been a really big sell-off for the past day or so. And in this sell-off, we started to get a nice pullback here on the Nikkei. And I'm not sure if it's going to give it to me. We'll see. We'll see. This might be one of those where it's like we're almost there, and it doesn't quite give it to me, and then we start to sell off, and I miss that trade. But I don't want to chase it because, to be honest, my luck is I'll sell it here and we bounce all the way up to like 820. I get stopped out and then we turn around. Let's see. Well, dang. I thought it was going to take a lot longer. We were right at the end of the class and we're on schedule.
Oh, wow, that was quick.
Yeah, I was thinking like, well, this might take a little bit longer. Because we have a lot to go over in an hour. But we have 6 minutes left. I went through everything that I needed to, and that I felt like was good in terms of we got through the whole watch list of these 6. Which is surprising to me. Yeah, we started off with the yen, and we're getting pretty consistent. And to have you on here more, I mean, even back and forth commentary, right? Not even a rapid fire. It was back and forth commentary on all of these markets, which was really nice. I like that.
Yeah.
One question. Were you here yesterday? I asked the big question to the chat.
I saw that.
Market mechanics versus intuition. I think that's what it was.
Yep.
How do you view it? And how could we explain it? How can we quantify it? Because, yeah, let's just leave it at that. What add to that?
So I think, let me make sure I'm saying this name right. And I think it's Waleed. Hopefully I'm saying that correctly. Just asked, am I more of a technical or discretionary trader? I answered kind of jokingly, discretionarily technical or technically discretionary.
Okay.
And it's a mix of both. And I think we all have to be a mix of both, right? You probably want to lean on technical patterns more than your discretion, right? I think the technical patterns need to lead your discretion, if that makes sense, right? Where discretion can just be like, hey, you know what? I feel like buying it here because I want to buy it here, right?
No, that didn't work for me on Power Hour.
Right. So you want to have some kind of technical basis to your discretion, but it's a mix of both. What I think traders sometimes try to hide behind is the technical part of it, but your discretion is what gets you to execute on a trade. And that's what we get paid for ultimately as traders. So you need to have a technical understanding of the markets, but you have to have discretion enough to say, hey, I see a good pattern, I'm going to take that trade. If you rely only on technicals, you never click the button. That's the way I see it.
That's a hard thing, right? Because I have tried trying to make a very mechanical execution based off a technical pattern. And in theory, like if you use, say, like a limit order, like as we was talking about crude oil, for example, and I'll pull up the crude oil chart and just trying to think through this, right? Because sometimes I could say it's pure mechanical in terms of like the execution, but then where I'm placing it, there's a little bit of intuition, right? Because you hear me say, I'm like, well, we know that crude oil likes to run stops. So if I'm going to place a buy limit order, I want to place it as if we was going to run stops. Now the intuition would come from like through experience and trading crude oil and understanding how that market reacts, because each market reacts differently. And I'm saying, okay, well, if crude oil does sell off and we do run stops, where do I believe that we could run stops? Now, there is no exact mechanical in the way that I trade, like saying, okay, exactly X amount of ticks below that low, exactly this point. The way that I look at it is like, okay, you know what? 70, 78, 77 looks like a good technical place to put a buy limit. Now for a stop loss, I could technically say X amount of ticks below the next pivot or wherever I put my entry, I want to have an exact 10 ticks from my entry. That can be one, but for me, I'm just like, okay, you know what? We do have a good area that I could put my stop loss right below, maybe 78.59. But then I also know that we can be a little bit volatile during slow markets. I like to let my trades have a little bit more breathing room when I leave them run overnight. So, the way the market's been acting, I'm okay with putting my stop loss at 78, say 45. Well, why not 78.46? Well, maybe I don't want an even number, and I decide 43 or 44, because just like we were talking about the house account, where you put it if we put it at say 78.50, well, that might have a little bit more likely to get filled than 78.48. And we had that conversation, and it's like, well, how do you make that mechanical? Well, can we decide is it going to be 45, 44? And there's these little tiny nuances that I've noticed and I've been thinking about for the past couple of days that I do in my trading, that it might not mean a lot, but then I start to notice that traders in the chat have like questions along this, and realizing that these little tiny things can make or break a trade.
100%.
And we've seen that in the house account a few times, where it went all the way down with Dobie, almost hit the stop loss, run right around, and we made $12,000. And that was like a $20,000 swing, right? From being almost down 10,000 to positive 12,000. That's a $20,000 swing.
Quickly use his discretion to say, you know what, our stop is here, but I need to get more room. And it's just a feel. It's a feel thing. We do it all the time, Dakota, when we call out a level. I'll be honest, I'm the worst levels trader that there is, because I'm trying to pay attention to exactly how the market is moving and then just jumping in there, right? So even when we call out a level for a house account trade, I think if traders seen it, and we'll do it on Friday, I'm sure as well. We'll call out a level in whatever market we're trading, and as we're approaching that level, we're thinking, hey, maybe this is the time to get in, or maybe we should wait, depending on how the market is approaching a level, or something that you might see that changes your opinion. But that level didn't come from your discretion. That level came from a technical setup. Your discretion is, how do I execute on that setup? And honestly, the best way to get that, traders, is through screen time and actually being in the market. You can't really teach that, unfortunately.
Yeah, I gave this reference during Power Hour, and I'll let this be one of my last things, because we are up on time now, is Tiger Woods. If you heard me talk about Tiger Woods, and I watched that interview, and I'll just do a brief summary, was that, and I wish I could find the link. I'm sure you could find it. It's on YouTube. It was like, inside lessons with Tiger. He was just explaining on how much of his golf game depended on Phil. Like, how is he feeling? Like, as he's swinging, like, how is his swing today? And he's able to change things midway, which is just amazing. But that's the same with trading. No matter what you do, we could make references to Michael Jordan. He closed his eyes during a free throw, having that muscle memory, having that feel. And I'm sure you could name any great athlete, or any athlete or someone who is good at their skill, going down to like construction workers, drivers, anybody who has a skill and who has done something for a long time, has a feel for doing it, and can do that better, because there's a lot of things that you just can't teach. And that's always been the debate between book smart and street smart, where you get someone straight out of college and you try and put them straight into the workforce, and they just can't perform at that type of level. But they have the skill sets, they have the knowledge to do so. They just now need to gain those skills that is unquantifiable.
Intangibles.
Intangibles. Yeah, there we go. That's the better word for it. So
yep.
I'm going to leave it at that.
Awesome.
Any last words before we end it here?
Someone asked me to give an update on my yen trade. I still like it. I may move the stop down, because what I'm seeing is the 30-minute candles.
Your charts. There you go. Your charts.
Yep. These two 30-minute candles here were heavy positive delta, right? Positive 1100 on this one and positive 470 on this one. And we're kind of holding around that 50%. We've been sitting here literally for the entire class so far. Maybe this is just me being accustomed to trading fast markets and needing to let this trade work. But yeah, that's where it is. It's sitting at 50% of this candle right here, kind of just hanging out. I'm $75 in the profit on a 2-lot. I think I'm just going to leave it. Joel is saying the yen is forming a bullish flag. Potentially. But I like the risk that I have on this trade. I like where my risk to reward is. And it looks like it forms these bullish flag patterns a lot, and then they break. So I'm just going with that pattern until it breaks, and I'm okay if I'm wrong.
Perfect. Fair enough, guys. Well, that was great. We had a fun. This was a great session. I love it. I love having guests on. I love having you on, Coach Jay. We was able to do that. Fire drill. Now remember, guys, if you missed it, they will be having it again. I believe during tomorrow during fast markets, and then again, I believe during the 1 p.m. Central Time. So there you go. If you guys did miss that, maybe show up earlier. If not, catch it tomorrow during fast markets or during that 1 p.m. Central. And I'm always going to be pushing to do stuff like that. Hopefully we could do one that's more exclusive to slow markets. We'll see. There's still some details. And then we're also ironing out maybe the charity trading event. I'm not sure. Like I said, all this is just me brainstorming and just bringing it out and seeing how great you guys think it is, and getting everybody else's opinion. So there you go. There's Danielle. Fast markets at 1 p.m. Central Standard Time, I believe. So
Nice.
Take care. And I missed that Nikkei trade. If anybody was curious, we did go up. We got really close. We got to 985, which would have been close enough for me to take it. I missed it, and I will see you guys. Tomorrow's Thursday, tomorrow night, and then I'll see you, Coach Jay, Friday morning.
Friday morning, let's do it.
Yes, let's have a better Friday.
Yeah, absolutely. We need one.
No more shorting the Friday rally.
We don't sell anything, just buy it.
All right. I'm going to hold us to it.
All right.
Take care.